We're going to go over beneficiaries and how beneficiaries pertain to you passing your life insurance pre-licensing exam course. If you find value in this video and it helps you out, please like and subscribe to my channel and check out my other videos on passing your life insurance exam course. So the beneficiary is the person who receives the money when the insured dies. So when you have someone who has insurance on them and they die, then the beneficiary receives the proceeds of that life insurance policy. Now, there are two main types of beneficiaries. There's primary and there's contingent. The primary is the first person in line to receive the death benefit when the insured passes. The contingent is the next person in line if the primary insured dies before, if the primary beneficiary dies before the insured dies, then the contingent receives the money. I'll give you an example. Say Betty is married to John and they have a son named Matt. Betty can name John the primary beneficiary and Matt as the contingent beneficiary. So if John dies before Betty, then Matt is the new primary beneficiary as the contingent. If they're both alive, John and Matt, and John's the primary and Betty dies, John receives the money. If John dies before Betty dies, then Matt receives the money. There's also a tertiary beneficiary that you can name in case they can be a third level. There can be multiple primary beneficiaries, multiple contingent beneficiaries, and the insured can decide what percentage of the death benefit they want each primary beneficiary to receive or each contingent beneficiary if there's more than one. So for instance, say Betty wants to make John and Matt both primary beneficiaries. She can put Matt at 75% of the death benefit, and she can put John at the other 25%. So there's also two types of beneficiaries when it comes to revocable and irrevocable beneficiaries. So a revocable beneficiary is one that can be changed without consent of the beneficiary. So in that case, the policy owner can change who is the beneficiary without having to ask for permission. So they can just go in and change it whenever they want. They can change the beneficiaries whenever they want. If it's an irrevocable beneficiary, then the policy owner has to get permission from the beneficiary, written permission, before they can make a change to the beneficiary, or before they can take it any cash value from that policy, or before they can assign ownership or assign that policy to someone else. So that irrevocable beneficiary does have power in that case. Now, there are rules set up to protect people if in the event that both the insured and the primary beneficiary die at the same time or in the same event. What's that called? That's called a common disaster. And there's actually a simultaneous death law. That's a mouthful. Simultaneous death law. What that means is that if both the insured and the primary beneficiary die at the same time or from the same event, then the contingent is the person who would be the beneficiary, not the estate of the primary beneficiary. So you can see that would come up. Let's look at the example from before. We have Betty and John. John is the primary beneficiary. Matt's the contingent beneficiary. If Betty and John die at the same time, then Matt now becomes the beneficiary, not John's estate. Okay? Now, in some insurance policies, there's a clause for this, and it's called the common disaster clause. And this is meant to protect the contingent beneficiary. Now, they can die separate times, too. So, like, for instance, say Betty and John are both in a earthquake. And Betty dies, and then John dies a few days later. Since they died in close proximity from the same event, then Matt is still the one who receives that benefit. So it wouldn't go to John's estate, right? You guys can see how that would arise. You can see, okay, well, would it go to the estate of the primary beneficiary, or would it go to the contingent beneficiary? So in that case, these rules protect the contingent beneficiary. So that's really what you have to know about beneficiaries when it comes down to your policy specifications and policy provisions in order to pass your life insurance licensing exam course. If you find value in this video, please subscribe to my channel, drop a comment, check out my other videos on my channel on how to pass your life insurance exam licensing course on the first try.